We're 3 hours into trading. It is Wednesday, August 4th. Hello, traders. Let's take a look at last Friday's pick. That's the last time I did a video, which, by the way, please subscribe to the YouTube channel, turn on your notifications. That way you're going to know when there's a new video posted. I've been taking some time off. Very quiet market. I suggest you do the same. Reduce your trade count, reduce your trade size. We're going into the summer doldrums and a news vacuum here very, very shortly. XOM, I suggested selling a bearish call spread out of the money leaning on that 100-day moving average. If you're able to do that, that trade should be working out nicely for you. Stock has relative weakness, downward sloping trend line. There's your flagpole, upward sloping trend line here. Now we have a bearish flag formation. That's why I believe the stock will continue to drift lower and that 100-day moving average will be preserved. So let's take a look at the market and see what it's doing. But before I do that, I encourage you to go back and watch my video from last Friday. That was July 30th when it was published. And you can see the video came out right about in here. I believe the market was starting to come off of that low right here. And I had said, listen, this is the high of the day. And I told you why I thought this low of the day would be challenged and that we would make a new low of the day. That's exactly what happened. We took out that low of the day, market finished near its low of the day. How did I know that? Well, a lot of that is by reading bars and candles. They tell me what the market's going to be doing through the course of the day. The market drives all of our decision making. So if you find yourself struggling with your trades and your entries and your exits, the first thing that you should do is look at what the market conditions were when you entered that trade. Did you get the market wrong? And if you did, then that's where you need to focus your attention first and foremost. Was I properly identifying market conditions? So let's take a look at what we've got lining up today. You can see how the market gapped down and we compressed. We had tiny little dojis in here, tails above body, tails below body, and mixed green and red candles. That tells you there is indecision right on the opening bell, and we may not be going anywhere fast. So we get a bearish 1OP cross right in here. We take out the open from that long green candle. Okay, you could take a little bit of a short here. I did not short the futures there because the action was very, very choppy. My best trade is going to come off of a market decline that eventually finds support. That way, when I do buy the futures, I know that I have the longer term market tailwind working in my favor because the longer term market trend has been upward. So I'm going to patiently wait for that opportunity. Now you can see how the market had been drifting lower. We had a downward sloping trend line, and I'll talk about this very briefly. These downward sloping trend lines here, you've got shorts who are going to stick with their short position as long as that trend line is preserved. As soon as that trend line is breached to the upside, you're going to get stopped out of your position. That also is going to attract buyers because they are looking at this downward sloping trend line going, aha, here we go, the market's going to get back on track. So they buy here, and then all of a sudden the move fizzles out and you start to see some selling. Well, anyone that bought that breakout right there to the upside is getting flushed out of the position. We have a gradual drift lower. I believe that the market is going to continue to probe for support. Now, this is not going to come as a big surprise, and you might think that, oh, he's sloughing on this call for what's going to happen this afternoon. I think the market's going to continue to drift lower. I believe that we're going to see a couple of red candles back to back that eventually signal that the lows for the day are in. You'll see those reverse. And where do I think the market is going to close today? I think it's going to close right about here, right where we're open. That is going to give us a doji. Going to go into the daily chart. Context is critically important to your trading. What the heck is the market doing? Nothing. Doing absolutely nothing here. So why would I think that it's going to rally? Why would I think that it's going to sell off? The market's going to continue to do what it has been doing. And you can see tiny little bodied candles. So when I make a call that says, hey, I think we're going to close close to the opening price, it may not seem like that's significant, but it is. So as you can see in the 5-minute chart, if we continue to drift lower, we get those long red candles, that will give us a nice opportunity to try and buy on the notion that we should at least be able to get back to that opening price. That's how I'm going to be trading. Right now, if you get 1 or 2 or 3 decent trades through the course of the day, that's really all that you can expect. You have to set passive targets, and you have to expect that any move that you see a stock making is probably going to fizzle out pretty quickly because there's nothing going on. And you're going to wish, if you're actively trading right now and you're quote unquote trying to make things happen, you're forcing trades. There's nothing there. And 3 or 4 weeks from now, when you've pissed away a lot of your capital, you're going to wish that you had not been trading right now. I know that what I'm saying is not popular. People suspect that, or they expect that professional traders are always full bore. There's always lots of great opportunities. We just have to try harder. We just have to find those opportunities. It's not like that. Right now, the market's telling you to be very, very passive. I view this as almost a relaxing period of time for me because instead of pounding out lots of trades, I might only have a couple of positions that I'm watching, and I'm extremely patient waiting for that right setup. So it's nice and relaxing. I'm actually taking a little bit of a break, and it's a little bit easier trading right now. A lot of people that are out there grinding and trying to make things happen, for them, yes, it is a very difficult market to trade because as soon as you get into a position, as soon as the stock pokes its head up and looks like it's going to break out, that gets you into the trade, and then the market or the stock reverse, and you're kind of left babysitting a losing position. So be very, very selective right now. For today, you're going to get a good trading opportunity probably in the last hour and a half, maybe 2 hours of trading. Wait for those long red candles in here. Wait for a bullish hammer with a tail under body that completely reverses, or wait for a bullish engulfing candle that clears one of those long red candles and closes above the open of it. When you see that type of formation, you'll know that that was a selling climax, that you'll have a nice little buying opportunity. We'll also be waiting for a nice bullish 1OP cross, and then we'll be able to get in on the action. So let's talk a little bit about 1OP. That gave you a really nice sell signal up here. Market continues to drift lower. Here, you had a bearish divergence. So you had the 1OP indicator rallying, and this is a compression right in here, and that told you that there was going to be some additional weakness. I don't put a whole lot of credence into this because I don't have a strong market trend. On a day when we have a very strong market trend, those divergences are extremely powerful. We don't really have that right now, but it told me that this little bearish cross in here might be pretty decent, and that we may have another divergence right in here, which we're going sideways. We're going to drift lower. I'm quite convinced that we're going to be drifting lower for the next hour or two. So I'm going to be really cautious on my bullish trades. That's what I've suggested members in the chat room do. Let's go in, let's take a look. Let's see if we can find a couple of bullish trades. I'm going to go into pop plus bull. These stocks were on pop bull yesterday, one of my favorite swing trading searches. And I'm going to show you a couple of stocks that are not setting up for a trade right now, but they could provide us with an excellent trade in the course of the next few days, maybe in the next week or so. So I like patterns where the stock has broken out to a new high. You can see I've got a downward sloping trend line right here. One of you had asked me to take a look at Snapchat, so I did. And when I saw it, I said, okay, well, maybe I'll review this stock in a video. So here's how I would trade it. gee, this looks like a nice support level. And it is. If that support happens to be breached, we're likely to come in and fill in this gap right here. But it's been able to, for the most part, hold that gap. I'm looking for a breakout above this downward sloping trend line. When I get one, I'm going to have an alert, and then I will be buying SNAP. And then depending on how long you plan on holding the trade, for me, I won't be holding it for more than probably a day or two. I would use half of this long green candle right in here as my stop. If I wanted to have a wider stop, I could use this, but I would prefer not to. Once I get this breakout above this downward sloping trend line, I'm not looking for it to retrace. It's had plenty of time to compress. You can see that was a really big earnings gap. So buyers liked it, and they're able to hold it pretty well up in here. So all these gains have been able to hold nicely. When it finally does break out above this downward sloping trend line, boom, 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 it should test that all-time high and continue to grind higher for at least a couple of days. This is an ideal situation where you can buy a call debit spread. And in this case, maybe you'd be using the 75 strike price and the 72.50. So I like that. I think it's nice. It's not there right now. We need to have decent market conditions, and we need to have that stock breaking through that downward sloping trend line. So put this on your charts. Make sure that you have that working. I'm going to go down to another stock, QCOM. Now, relative to SNAP, I don't like this one as much. And you can see that Qualcomm is very choppy. You can see the long tails in here, mixed green and red bodies. We do have a nice horizontal breakout right here. That was resistance, Now it's support. We open there, come back and check it one time. That's nice. I like that it checks that breakout. You can see how it's been able to hold it. So what would I do with this? I just clicked on this bar, so I have a horizontal bar. If the stock is able to get above the high from today, I would start considering it for a bullish trade. You don't have to buy calls on this. You don't have to do a call debit spread. You can see it's very choppy. I would opt to sell a bullish put spread, and I'd be keying off of that $145 support level. So that's how I would play it. Both picks today are bullish. Don't see a lot right now happening in the overall market, so I'm going to keep this video very short. AMD has been on our list. It's been fantastic. mRNA has been fantastic. BTBT looks really good today. You can see these long green candles, and the fact that the stock has been able to hold all these gains on heavy volume tells me that it wants to go higher. It's above the 200-day moving average. That's nice. Go into the 5-minute chart. You can see I've got a couple of alerts set. I'm going to set some more alerts. I'm looking for an entry point on this. And now if the stock is able to get through this horizontal resistance, I'm going to know about it. So overall market, here's what you should look for this afternoon. Look for the low of the day to be tested. Look for a long red candle or two that are easily reversed by the next bars. 10P bullish cross here. That will tell you that the lows for the day are in. We should see a nice little rally back, and I suspect that we're going to be able to get back to the opening price today. And on a D1 chart, you're going to see a doji formation that puts us somewhere around SPY 439.75, and I see dull trading taking place. I haven't talked about the economic releases, so let me spend a minute there. We had ISM manufacturing come out. It was a little soft. First number that we saw below 60 this year, and that came out yesterday. Today we had ISM services, which I consider to be the more important of the two numbers because 80% of the jobs are in the service sector. This is a bullish explosion that's happening while we speak. So we'll keep an eye on that. We'll take a look at the daily chart. Nothing too great going on here. It could just be a short covering bounce. I like these alerts to go through horizontal resistance and major moving averages. So in any event, we've got ADP that came out this morning. Very, very weak. 330,000 jobs created in the private sector during the month of July. Analysts were expecting a much bigger number, somewhere around the 700,000 level. That does not bode well for Friday's unemployment report, so we're likely to see a soft number there. What does the market think of all this? Zzz, doesn't care. Right now, the economic releases are not having much of a market impact. So unless we start seeing really high wage inflation, so watch that wage component in Friday's number, I don't think you're going to see a whole lot of market reaction. We've got earnings season climaxing. We've got all the big economic releases out of the way Friday. Expect to see very light volume and tight, compressed trading. That is the context that you have to have for all of your trades. So when you start out the day, do not chase stocks on the open. Make sure that if they have technical breakouts and heavy volume, that those breakouts hold, because you can easily see retracement in this type of market. And then if you rush in, you're going to be left holding the bag because the market's not going to give you a tailwind to lean on. That's all I've got for you today. Please leave your comments. I'll make sure to reply to them. Good luck with your trading, and hopefully I'll post another video in the next day or two. Good luck. Bye now. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.